guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying positive out there. It is never a dull and boring moment in crypto, finance, or the stock market. That is why I love doing daily market updates. Now today, yes, it is the second video for today. This one is going to be one that I have not done in a very, very long time, and that is dividend investing. I have not done a dividend investing video for the stock market on Wall Street for a very long time, and I thought I would make a video to show you guys. Literally 3 years ago, as you can see, was the last one that I made for my YouTube channel. And I will say that dividend investing for me was one of the main reasons why I obviously started a YouTube channel, because I discovered dividend investing and I became very passionate about it. And I literally have not stopped since I started my YouTube channel. No word of a lie. You can see the first video 5 years ago on my channel down here. This is like some of my earliest content, and I thought I would share this with you all because I think it's very important to know and be knowledgeable about dividend investing in general, and of course the stock market. So I am going to do a video on, of course, what dividend investing is, how you guys can start, and of course this has come a long way for me to actually write my own dividend investing guide, and a full guide I'm talking about. This is an ebook that I wrote about dividend investing, and I think it's very, very important and powerful for anyone to get started. And yes, I do have my espresso, so I'm going to do a quick walkthrough of what dividend investing actually is. And yes, I'm going to take this from my ebook so you guys can read this. And by the way, you can buy this at the wallstreetbullofficial.com. The link is below in the video description. And again, I have not done a dividend investing video for, 3 years now, right? Now, the really cool thing about this is it really is the true form of passive income and generational wealth. And I hope this video brings a lot of you a lot of value. There's a lot of people that have watched my channel for years, and a lot of you in the early days watched my content on dividend investing, but we'll get into it, guys. But basically, what is dividend investing? And I like to put it as passive income. And, you know, imagine waking up in the morning, checking your phone and seeing that your bank account has grown overnight, right? Not working extra hours, but from investments paying you while you sleep. You literally make money while you sleep. And this is one of the true secrets of the wealthy, and I hope you guys are listening to this. This is the essence of passive income, earning money with minimal daily effort, allowing you to enjoy financial freedom and security. And I know a lot of us are struggling out there financially in this day and age. Cost of living is through the roof, especially in Australia, and I'm sure around the world. So this is definitely helping me in my life, all right? So passive income differs from active income, where you trade time for money, such as working a 9-to-5 job. Instead, passive income sources like dividends from stocks, rental properties, or royalties allow you to make money regardless of whether you're actively working. And that's the truth. The key to successful passive income is building income-generating assets that continue to pay you over time with little to no additional effort. All right. While there are many ways to earn passive income, dividend investing stands out as one of the most reliable, scalable, and accessible strategies for long-term wealth creation. This is literally, I'm reading it from Money Never Sleeps. Now, why dividend stocks are a great way to generate passive income, right? Dividend paying stocks are one of the most powerful wealth building tools in the world of investing. Unlike speculative stock trading, aka investing in Nvidia, of course Tesla, all these companies that are speculative assets, the world of artificial intelligence at the moment is going parabolic, and of course these chip making stocks have gone crazy. We're not doing that. We're thinking long term here, all right? You can see, unlike speculative stock trading where the profits rely on buying low and selling high, dividend investing focuses on steady cash flow from high quality companies that share their profits with shareholders in the form of dividends. Predictable and reliable income stream. Many companies pay dividends quarterly, monthly, or annually, and only of recently, I should say in the last 12 to 24 months, weekly. Okay? Obviously providing a regular stream of income that investors can use to cover their living expenses, reinvest, or grow their portfolio over time. The best part, these payments keep coming in even when the stock market is volatile. This is one of the key things that people don't understand about the stock market. If you're investing in high quality stocks, long-term or blue chip companies, they call it, in Australia, it'll be, the big banks or the big supermarkets or grocery stores, all that kind of stuff. Or in the United States, the S&P 500, which is the top 500 companies. These things still pay dividends regardless of whether the market is volatile or not. It still pays cash flow. The power of dividend growth right here. High quality dividend stocks don't just pay dividends, they increase in value over time. So your initial capital is going to increase over time as well as getting paid holding that asset or the stock, so to speak, right? Companies with strong financials and a history of dividend growth, such as dividend aristocrats, which is what we call them, companies that have increased their dividends for the last 25 consecutive years, provide investors with an income that keeps up with and of course outpaces inflation, because inflation is continuously going up. Money's, becoming less and less, worth what it is today. This is why we need something that's going to increase over time and provide that cash flow as well. And compound interest and reinvestment, one of the most powerful wealth building strategies of reinvesting dividends. Now, through dividend reinvestment plan, or DRIP, we call it, investors can automatically buy more shares with their dividend payouts, creating a compounding effect that accelerates portfolio growth. Now, if you are somebody young on my YouTube channel out there in the world, wherever you are, the beautiful thing about being young is you have time. Time is one of the most valuable assets there is. It's precious. Don't waste your time, because the longer you're in, as an example, a portfolio or the stock market, the longer time you're going to have to compound. Now, I believe it was Albert Einstein said that compounding is one of the 8 wonders of the world, because the longer you're in the market, the longer you're going to have time to compound and grow a portfolio. Every single major investor out there, everyone from Warren Buffett to, all of them. I can't even think of them on the top of my head. Mark Cuban, Tony Robbins, even the Wolf of Wall Street himself, Jordan Belfort, has said the S&P 500 invested over a long period of time will generate. And it's true. It is absolutely true. So if you are young, stop wasting your time, focus, allocate a percentage that you can afford. It doesn't matter what it is, so long as you are investing into something that's going to appreciate over time. This is the secret of the wealthy, all right? Now, again, passive income is another one without selling the assets. So when you're buying a speculative asset, such as, of course, Nvidia or Tesla, these investments, as of recently, they have not been paying a dividend or, a cash payment to their investors. They are something that increases over time in value and you sell it. So with dividend investing, you don't have to do that. So unlike traditional investments that require selling an asset to generate cash, dividend stocks allow investors to earn money without liquidating their holdings or selling their positions. This makes them a perfect strategy for long-term holds and long-term investors who want to build generational wealth. Now, dividend-paying stocks, particularly those from established blue-chip companies, tend to be more stable during market downturns. That is a fact. While non-dividend stocks can experience wild price swings, dividend stocks continue to provide income even in bearish markets, making them a solid defensive investment strategy. So if the market is very volatile, dividend stocks will continue to pay. And I wrote this book for a reason, because again, I haven't done this for a very long time. And if you are interested in this, please go get a copy of Money Never Sleeps, this book. Read it. It is the best thing you'll ever read, because once cryptocurrency and of course, our favorite cryptocurrencies go parabolic, you're going to have to sell that asset. You can stake it and earn a yield, but you're going to need something or a vehicle to generate income for the rest of your life and become generational, right? I'm going to have a sip of the coffee, then we're going to get into it. So again, here is the Wall Street Bull Official. This is my website. You can come over here and you can grab yourself a copy of this book. All right, so it's $40 Australian, well worth it in my opinion. Now, typically the best way to get started is you need a broker. I mean, there are dozens, and I'm not paid to say this, by the way, but you can go Stock Brokers Australia, so to speak, or this is worldwide. There are heaps of them. I mean, you've got CommSec, Commonwealth Bank, you've got Hello Stake, you've got eToro in the United States, Interactive Brokers, and in Australia you've got Robinhood as well, which is great. There's heaps of them. Moomoo, there's just dozens of them. CMC Markets, just be careful of the I will say, for the minimum investment required. Interactive Brokers tends to be very expensive and quite a nightmare. I'm just saying. Hello Stake is great here in Australia. I got into them when they first started in Australia years ago. So go check them out. You need a broker, that's first and foremost. Then, of course, you'll need to KYC. It's very different to crypto. It's a bit more traditional. And you'll be able to get started in investing. The other thing I will suggest is you need what they call a dividend tracker. And this is to track your dividend income. Okay, very important. And I do mention this in the book. So again, I use Div Tracker myself. You can use many of them out there. There's heaps of them on the mobile phones. So make sure you go get yourself a Div Tracker once you've set up a brokerage account. And again, so first and foremost, the best by far investment is like the S&P 500 or VU as an example for long-term appreciation. I mean, this is currently trading at the moment $610 US. And over time, this has increased dramatically, as well as paying distributions, so to speak. Historical data, if we click this, you'll be able to see all of these. And now a ticker symbol is the 3-letter or 4-letter, again, way to find it on the stock market as an example, right? As you can see, the price has increased over time. Historically, it's gone up. Like last year in 2024, the price of the stock was $524. It has increased. There is a dividend yield. I will say, dividend yield is a very interesting one. Now, not many people speak about this, of course, but if we come over here, I'm going to add VU as an example, right? If I go to the ticker symbol and I add VU, which of course is the Vanguard S&P 500, right here, add holdings. So the dividend yield is sitting at 1.15%, which is quite steady and has a lot of room for growth. Okay, so normally when the yield is quite low, it's quite good in terms of long-term growth and appreciation. If the yield is high, there is risk of that. And of course, there's many other different types of funds nowadays. But as an example, if I was to add a holding, a number of shares. Okay, so say we have, by the way, if you wanted to invest, let's say 1,000, say 1,000 or 10,000 Australian dollars, you'd require 6,500 shares. Now, if I was to do the math on this quickly, if you go 10,000, or I should say 6,584 US dollars, I'm going to divide that by the share price. It's $610.11 at today's price. We're going to have 10 shares, 0.79, and the average share price is 610, we'll just say. And then enable tax rate. The other thing is as well, there needs to be 15% tax in Australia, because again, that's what happens. And then we go save. Right, so again, we can come over here. Let's have a look to portfolio. There we go. So there's 10,000 Australian dollars in here. The cost basis is 10,000. The annual dividends, though, is an interesting one. If we come over here to Vanguard, let's check the dividends right here. Where are we? If I can find it, guys, let's have a look. Dividends, here we are. annual dividend income, sorry about that, ladies and gents, is $98 a year. Okay, so this is for long-term appreciation and growth. This is what people need to understand. So for those of you that are younger, it's something that you need to consider for long-term growth, because over time this is going to compound. Now, I use the mobile app of this, but you can see the dividends being paid here quarterly, right? As you can see, March 5th, Jan 16th, ex-dividend passed. The next one is March. And then, of course, we have all of them going back to 2015. The dividend charts right here. Here's a perfect example of this. So there's 4 times a year that this gets paid. And the amount is obviously $1.74 per share. Long-term growth. Long-term growth. There is an option in here to actually check this for long-term growth. But anyway, moving on. Then you can look at something like QQQ, which again is the NASDAQ or tech sector for, again, long-term hold. It's currently at $598 US. So again, if you wanted to invest another $10,000 in that, as an example, divide that, or I should say, let's go here. USD is 6,500. So we're going to actually divide 6,584, divide that into the current share price of Invesco, which is $598.73. It's going to equal 10.99. So you come back over here, you can add a holding, QQQ. And again, this gets you exposure to the tech sector. You can add a holding here. Number of shares, 10.99. The average share price is 598.73. We're going to add a tax rate of 15%. And then you come over to dividends. This is paying $40 a year in dividends. Now, again, that may not sound like a lot, but when you compound that over time, if you scroll down here, again, time in the market, right? And you can come over to your portfolio. Cost basis is $20,000. Simply incredible. It's passive income. And as you can see, portfolio horizon, this is where the compounding comes into effect, okay? So number of years, 1 annual dividends, again, after a year is $257. And then it keeps compounding. After 20 years, it's $4,500 a year. And that capital has increased dramatically to 305,000 Australian dollars in 20 years, right? Now, the crazy thing about these days is that you can obviously invest in monthly dividend paying stocks. As an example, S&P 500, which is SPHD, is the ticker symbol. This invests in the top 50 companies in the S&P 500. We have real estate, we have consumer staples, utilities, financials, healthcare, communication services, energy, industrials, and materials. Real estate is also a big thing in the S&P 500, and of course dividend investing, because it's getting the rental income from these investments. So you can invest in any one of these sectors. This one does it for you. So again, it is an ETF. You can invest in this one as well. Let's say, for example, we added SPHD to this portfolio. So let's go SPHD. We're going to add this one right here. Okay, so it's $49 a share. So let's work this out. We can get 6,000. Let me just check it was $6,584. Divide that by 48.98. That's going to be 134.42 shares at an average price of $48.98. We're going to edit a tax rate. We're going to go 15%. Save. There you go. Now, the dividends for this is actually 307 Australian dollars per year, combined with the others. Okay, so at the moment, the portfolio is now worth $30,000. And if you come down here, the dividends coming in from this in the 1 year is $743. Again, compounding over time, that's going to be $13,000. The portfolio value is going to be $379,000 in 20 years. This is the power of compounding. And of course, reinvesting those dividends. Now, where it also gets crazy is there are things like covered call ETFs, which generate higher yields, more risk. And again, that dividend yield is crazy high. So if you're going QYLD, we can come over here And we can add this one now as an example. And this is not by any means financial advice. Please do your research. But as an example, this is a monthly dividend paying ETF, right? Now, QYLD, again, we're going to come back here, 6,584. Divide that by the share price of $16.99. This has more risk though, because the capital appreciation isn't that great. The higher the dividend yield, you've got to be mindful of the capital appreciation. Divide that by, 6,000. Let me just go back here, 584. Divide that by $16.99. That's going to be 387 shares, right? We're going to go, the average share price is $16.99. We're going to put a tax rate in there of 15%. Let's just wait for this to load. This is going to generate $1,117 in annual dividends. Coming over to the portfolio, it's now worth $40,000. So there you go. There's the composition. The dividends right here. Keep scrolling down. The first year it's $2,574. And as you can see, the portfolio value is $52,000. If you scroll down to 20 years of compounding, longer than the market, the better. That's going to be worth nearly $1 million. Okay. The income from that generated, though, in 20 years will be $172,000. Now, again, you can get really crazy with these funds now, because these QDTE and RDTE, all of this stuff pays weekly dividends. And again, let's just go back to here again. We're going to add QDTE as an example. This is a weekly dividend, NASDAQ covered call ETF. And again, we've got $6,584 divided by the share price of $35.60. That's going to get 184 shares, 0.94. The average share price is $35.60. We're going to enable drip, 15%. We're going to save it. There you go. The dividends annually is 3,120 Australian dollars. However, the yield is at 36%. There is a real risk of this changing dramatically, and it does vary. It doesn't stay consistent all the time. Historically, the dividends have been very, very volatile in terms of what they've been paid. As you can see, it's weekly, but it does vary. So you need to keep that one in mind. Whereas the S&P 500 or Vanguard pays quarterly, but again, it is a lot more stable for long-term growth. Now, coming over to Div Tracker, now that we've added QDTE or Round Hills Fund, the portfolio is now worth $50,000, and the composition is 20% SPHD, 20% QDTE, 20% VU, 20% QQQ, 19% QYLD. Pretty straightforward. The first year, it's going to be dividends of $5,361, which is incredible. And of course, if you come down to 20 years, that's long-term horizon. Without taking any money out, reinvesting the dividends, it'll be generating 718,000 Australian dollars. Portfolio value in 20 years will be $2.4 million. And again, that's bearing in mind, there's a lot that can happen in 20 years, but the dividends will still keep coming in. Obviously, if these companies and these funds don't change that dividend, which again, there is a risk of that happening with the higher dividend yield. So there you go. That is dividend investing. And again, you have utilities that you can invest in, REITs or real estate investment trusts, known for their high yields, and they do pay monthly. There are many different types of REITs, which I go through in my book, MLPs, telecommunications. There's a whole range of sectors you can invest in, but that is dividend investing in a nutshell. Now, you think about that for a moment with regards to cryptocurrency investing. And of course, you know, what's coming with these gains. These portfolios will service the rest of your life. No one really explains this to everybody. This is the secret of the wealthy. And I hope that brings you a lot of value. Go get a copy of Money Never Sleeps, my dividend investing book, because I think it's very important that you get knowledgeable on this stuff. Get yourself a brokerage, get the book, read it a dozen times if you need to, and start investing in Wall Street, in the stock market, and get your money working for you. Very, very bullish, guys. Stay positive. Any questions, feel free to email me at earncurveinvest.com. And yeah, hope you enjoyed that video, guys. Take care of yourselves. Bye.